Whatnot is the sponsor of today's video. Thank you for your support.
Hello everybody, Silver Picker here, and today we are going to be tier ranking the top 25 types of investments that you guys can make. Yeah, it's a silly, ridiculous format, and I already know that you guys are going to be arguing in the comments section about whether or not I should have put something in B tier instead of A tier or S tier instead of F tier. But really, this is actually a pretty important video because it's going to expose you guys to lots and lots of different types of investments, and it'll answer a lot of your questions about what the pros and cons of these investments are, and that will set you up to build a diversified, really strong portfolio that will help you ultimately build real wealth, generational wealth. So we're gonna have a good time doing it, but remember that there is a really strong value to understanding the principles of this video. So anyway, enough with the jibber jabber. Let's crack into it and see what gets the S tier and what gets the F tier. All right, so as you can see down here, there are lots of different images that all represent different types of investments. And if you're new to my channel, you'll notice there's a lot of precious metals and coins related stuff. Well, that's because I am generally a precious metals and coins related channel. I also do a lot of videos on alternative investments and personal finance, so it fits all right in here, but you're gonna learn a lot about coins too if you're new to that. So let's kick it off with this guy right over here. So this coin, or more appropriately bullion round, will represent generic silver bullion in general. Now, if you've been watching my channel a long time, you know that I have almost like a slogan where I say silver is silver, right? Investing in any type of silver is good. But I'm actually not a huge fan of generic silver bullion. And the reason for that is because there are so many different designs, so many different makers, so many different weights, that there is a lot of fake stuff out there, and that makes it much harder to sell, even if you have the real stuff, because people are suspicious of it. And for good reason. Now, of course, silver is silver, so if you get an incredible deal on it and you're sure that it's authentic, get it, for sure. I mean, below spot or at spot, definitely pick it up. But in terms of an investment, there are alternatives, right? Government issued silver bullion, American silver eagles, maple leaves, Britannias, etc. That unless you were talking about like a zombie apocalypse or some other cataclysmic event, when you resell it, even though they have a premium, you generally can recoup that premium. So I'm not really turned off by government silver. And that's why, honestly, I'm going to be rating this generic silver bullion in C tier, because there are so many other better options for investing in silver out there, in my opinion. All right, we're just gonna go in order, right? So the next thing over here, this is representative of a government bond or a treasury bill. Now, essentially what that is, if you don't know, is that you're basically lending the government money when you buy a treasury bill, and they use that for all the different things that the government spends money on. And assuming you trust that the government will remain solvent, meaning they'll be able to pay back their debts, well, then you're going to earn interest on that loan. And typically, treasury bills, because the United States government is seen as so strong that it's seen as very low risk, and everybody knows that in investments, you get paid for your risk. Essentially, it's reward for risk, that on a low risk thing, you're not gonna make much money. So this has fluctuated over the years. Right now, the treasury bills are around 4.5% to 5.5%, which is not bad at all. And that's the reason why I think they're not a bad investment, because they are safe. If you have some money you wanna park somewhere for a long period of time, it might not be a bad idea. But because most of us have limited amounts of money, right? Most of us don't have, billions of dollars that we can just buy every type of investment in the world. There are some better investments that are both relatively safe and will also be higher yield. And that's why I'm honestly gonna put that in C tier as well. All right, we're not off to an incredible start yet, right? But all right, I'm having a good feeling about this one. So this is an American silver eagle, and I'm using that to represent all major government issue bullion coins. And the difference between a bullion round and a bullion coin is that a coin has a denomination and is issued by a government. And that means that there is a higher premium on it because there is more trust. And essentially that goes back to the risk issue, right? It's lower risk because it's issued by a government, harder to counterfeit, etc., etc. And I am a huge fan. If you're going to be investing in silver bullion, physical silver, I am basically all about the government issue silver. And that's why I'm going to be putting this in A tier. I think this is a great place to park cash. Now, there are a lot of different ways that you can invest in silver, right? You can speculate on it, you can buy it when you think it's low and then resell when it's high and then buy back in when it's low again, etc., etc. Or you can use it for a long-term investment. For me, I look at precious metals mostly as a hedge against inflation, meaning if I have money that I would otherwise be keeping in cash for, let's say, a rainy day fund or an emergency fund, I'd rather have it in precious metals because they are less prone to being affected by inflation. So I don't really look at it as an investment for growth or speculation as much for my personal portfolio, but more as a way to safely park some cash for a rainy day. All right, next up are stocks. These are just general stocks, right? This is an old Coca-Cola stock certificate you see in the image. And stocks are an amazing, amazing opportunity. I mean, people have made literally millions and billions and collectively trillions of dollars in the stock market. And it has made people very, very rich. And it has also made people very, very poor. There's an old saying on Wall Street. They say bulls make money, meaning when the market's up, bears make money when the market's down, and pigs get slaughtered. And that's the reason why I'm going to be putting this in B tier. So I think stocks are obviously a good investment. A huge percentage of my portfolio are individual stocks, but they are very, very dangerous if you don't know what you're doing, right? Just buying a stock because you like the company or because you can afford the actual share price doesn't mean that it's a good investment. One of the things, and there's a whole world, we could have an entire video, an entire channel just on the stock market, and there are millions, hundreds of channels on the stock market, but one thing that people don't realize is that companies have their future expectations built in to their stock value. Meaning, if let's say a company is expected to grow by a certain percentage over the next few years, or they have some big contracts lined up, all of that expectation is built into the stock price today. So unless you're really sophisticated and think that the people who do this on a daily basis for their living and are essentially analyzing stocks, unless you think that you're better at it than they are and that they missed something and they actually undervalued the stock or overvalued it, that you're going to be better at it and you're going to be able to make a smart decision on the purchase. Most people are not capable of doing that, and frankly, I'm not amazing at that either. I have a money manager that does the vast majority of my stock investing, but I do have an account on Robinhood where I do buy individual stocks just for myself because I enjoy it, and there is an element of gambling to it, but I do some of my own, my own research, etc. But essentially, if you want to get into stock investing, study it, learn a lot, get into the weeds, get into the math, and also start small, right? Don't start investing your life savings in the stock market hoping to get rich quick because you're much more likely to get poor quick. So that's why I'm putting it in the B tier. It's a great opportunity, but it is very dangerous. Next up, we've got a Charizard card over here, and this is going to represent collectibles in general, investing in collectibles. Now, if you've been watching my channel a long time, you know that I am, first of all, a coin collector, first and foremost, but I also am a huge Magic the Gathering player. Magic the Gathering is an incredible collectible card game where some of the cards are worth hundreds, some are worth thousands, and there are even cards that are worth in the six figures, hundreds of thousands of dollars. And while I have invested to some degree in a lot of these cards, and I do have a Magic the Gathering collection that's worth probably close to $30,000, and my coin collection is also worth in the tens of thousands of dollars, I actually personally don't view it as a investment per se. I look at it as an intelligent hobby, right? In a lot of hobbies, you spend money, and when you're done with the hobby, you get nothing back, right? The hobby, you had your experiences, you have your stuff, but there's no resale value. I look at this more as a way for me to enjoy a couple of different hobbies and a couple of different collections, and if I'm lucky, I'll be able to sell it when I'm done with it for more than I paid for it, or I'll at least be able to recoup some of my investment. But I actually don't think that it's a smart investment per se because people are fickle. Things go in and out of fashion very, very quickly. Things get, things that were once really, really popular and valuable and hyped up can lose a ton of value very quickly. And look, if you've got lots and lots of money to spare, right? If you've got, hundreds of thousands or millions of dollars that you can invest, and you want to put a small percentage on some moonshots, right? You want to buy some undervalued Pokemon cards or Magic cards or coins or whatever it is, thinking that you're going to, sort of speculate on it and then sell it for a lot more someday, go for it. It's not a huge, huge deal as long as you take it as a gamble more than as an investment. And that's why I'm going to put it in the D tier. As much as I'm a big fan of collectibles and enjoy collecting them, and I also enjoy buying and selling them. I think the business of buying and reselling is a great business, as you've seen on my channel. But in terms of long-term investment, pretty dangerous. Next up is gold and silver in the form of jewelry. I am a big fan of this because it is something that is utilitarian, It's useful, you can enjoy it, but it's also an investment. I look at it in the same way as I look at all precious metals investments, not as a speculative thing where I think it's going to, gold's going to 10,000 or silver's going to 1,000 or something like that. I don't buy into any of that stuff. But I think it's a really good place to park cash and preserve wealth. And I'm actually going to put that in A tier as well, right? If you want to wear a necklace, earrings, rings, in fact, in Indian culture, that is a huge way of preserving wealth. They have gold bangles, gold rings, gold earrings, etc. And that has been something that they've been doing for centuries and centuries and centuries. And I think it's great, right? I don't assume you're going to put hundreds of thousands of dollars into bracelets and necklaces and stuff, but if you have a few $1,000s that would otherwise sit in the bank and you want to enjoy it as a necklace, go for it. Just make sure you have good insurance too. Okay, here we go. We've got some controversial stuff. This is a Bored Ape, which of course will represent NFTs in general. Now, I am big into crypto. I think crypto and NFTs in general and conceptually and philosophically are really, really great, but we are still in the super early phase of crypto, of NFTs certainly, and the market hasn't quite figured out how it feels about NFTs, and I think that the NFT makers also haven't really figured out what the true value is. I think some of these NFTs where you're buying a piece of digital art, but behind the art there's events and club membership and other kinds of real world benefits attached to owning that NFT. I think those are great, but as we've seen with the NFT crash and all of the scams that were going on with it, I think in terms of an investment, at best, I kind of want to put it in F tier, but I'm going to put it in D tier because I do believe that someday NFTs will be figured out, and some of the NFTs today may still end up, going back up in value. We've always had these peaks and valleys in the crypto world, so I'm wondering if it's going to be the same for the NFT world. But I would personally, I have not bought any real big NFTs. I've bought a few very, very cheap ones back in the day, mostly just as an experiment to learn, but I've not invested in any real NFTs, and I would definitely not recommend it. By the way, if it wasn't clear, I'm not a financial advisor, and this is my disclaimer. Don't take any of this video as true financial advice. Do your own research, and understand the risks and potential rewards before putting any of your hard-earned dollars into anything. All right. Next up are bonds. So we talked about government bonds, but now we're going to talk about corporate bonds. So some people hear stocks and bonds, and they don't really know what the difference is. So a stock is buying equity in the company. You're buying a very, very small percentage of ownership of the company, right? So if I buy one share of Coca-Cola, I actually own one, I don't know what the market cap of Coca-Cola is, but I own like 1/10,000,000th of the Coca-Cola company, which is really, really cool. And I earn money from that, whether it's by the value of the company increasing, that I can resell the stock, or whether it's through dividends where I'm actually paid out a share of the profit from the company. Bonds, on the other hand, is buying debt in the company. It's lending the company money and then they pay it back. You're essentially like a bank, right? You're lending the company money and there's an interest rate attached to it and you're going to earn money back on it. Now, I'll be honest, I don't know much about bonds other than what I learned in my MBA in business school. I've never personally invested in individual corporate bonds. I have invested in government treasury bills, but I've never invested in corporate bonds. And I'm curious, if you guys are big into bonds, put it in the comments below and let us all know about your experience, because I'd be interested in learning about it. I'm sure other people would be interested in learning about it too. But because of that, I'm going to put it in C tier, mostly because I don't know that much about it, but they're definitely not exciting compared to stocks, and you're not going to have these big punches of incredible return with a bond. Next up is crypto. Now, I have been involved in crypto for years, long before this most recent hype train started. In fact, I have Bitcoin and Ethereum, and I bought both of those so early that even though they've come way down in price since their peak, I'm still way up on all of my crypto holdings. And I really, really think that the philosophy behind crypto is really, really smart. And I still think that there's a lot of opportunity in the world of crypto. And while right now I'm not purchasing more, I am definitely not selling my holdings. And I think that if it's not an A tier, just because, it's still a new technology, it's still a new investment vehicle, I am going to put it at B tier. But it's a solid, solid B tier. And I think everybody should at least invest in crypto a little bit so that they can learn about it. It's an important technology. It's an important cultural event that has been going on the last decade or so. And even if you're just putting in 50 or $100, just learn how the process works. Learn how crypto works. It's like investing in education. Next up is CDs. Well, I'm being a little funny here by putting a compact disc here, but what I'm talking about is certificate of deposit. It's a type of bank account investment essentially, or it's a type of investment account that you typically get through your bank, and essentially what you're doing is you're depositing money into your bank like you would in a savings or a checking account, but you're committing to the bank to leave that money there for a certain period of time. Typically there are 3-month CDs, 6-month CDs, 1-year CDs, or even decade-long CDs. Back in the past, like in the 80s, you could have like 10% or 8% or 6% or 12% CDs, which meant every year you would have your cash growing by a huge percentage. And there are people who made a lot of money on a very, very safe investment back then. Nowadays, CDs are much, much lower. Right now, because interest rates are high, you're actually able to get CDs that are in like the 5% range. I have a bunch of my cash in CDs right now, in 1-year CDs, and I am a huge fan of them. I am putting that in A tier, right? It's not an amazing return, right? You're never gonna make like 50% or 100% or 1,000% on your investment, right? But it is relatively safe, or I should say it's extremely safe as far as investments go. But it's a way to keep your cash growing as opposed to just sitting there and losing money due to inflation. Next up is kind of cheating. It's not an investment in the traditional sense where you put money in and get money out directly, but it is education. And I'm putting that as an advanced degree or a college degree. So I did an undergraduate degree and I also did a master's. I did an MBA, a master's in business. And when you do an MBA, especially at a good school, your earning potential goes up so much. Same thing, by the way, for a college degree, right? High school degree versus college degree, college graduates earn more than high school graduates. And when I got my MBA, my job from before my MBA to my job after my MBA, I literally doubled my salary. Not exaggerating, doubled my salary from working for a mid-sized manufacturing company in marketing to becoming a strategy consultant at Accenture, one of the biggest companies in the world, doubled my salary, and that's thanks to my MBA. So that is going in S tier. I know it's cheesy, but seriously, anytime you can invest in your education, do it. And that doesn't always have to be formal education, right? It can be self-taught, right? I know people who have literally done self-guided courses online to become computer programmers, and they're making 6-figure salaries off of the education that they did for themselves in their spare time. So huge, huge fan of that. Next up is commodities. Commodities in general, right? You see here we've got oil, we've got corn, we've got wheat, we've got coffee. There's silver, gold, and copper and other metals in there as well, but I'm focusing on this mostly as sort of more traditional, or I should say not more traditional, but non-metals commodities, because we're talking about metals in other places. And there's a lot of opportunity here, right? Oil is the only one that I've personally invested in specifically, but I've made some pretty good money investing in oil. Admittedly, for me, it was more of a gamble. I am not super well versed in commodities trading, but if it is something that interests you, the whole idea of this video is to expose you to lots of different things. Many of you might not have even realized that on the commodities exchange, just like on the stock market, right? You can go in and you can buy futures for coffee, or you can buy oil, or you can buy corn, right? There's so many different commodities that you can trade, and if it's something that you're passionate about, or you think that you have an edge somehow over others that are investing in that market, you might want to dive right in. And I'm going to put that in B tier as well. Just like stocks, I think that it is a equally reasonable thing to invest in, and you can go long term on it, you can go short term on it, and you can make a lot of money trading in commodities. ETFs, or electronic traded funds. These are essentially mutual funds, but that have an electronic, so to speak, a computerized trader, as opposed to in a mutual fund. Well, let me back up. A mutual fund is essentially a basket of stocks that allow you to buy into that basket of stocks and get a diversified portfolio of stocks just for one share of that collection, right? So essentially, a mutual fund, some of them are themed, right? Maybe a mutual fund will have 100 different healthcare stocks in it, or 100 different technology stocks, or it might be just for the S&P 500, right? It'll have like all the stocks in the S&P 500, and they'll buy, $10 billion worth or whatever, not that much, but you know what I mean. They'll buy a huge amount worth, and then and then they'll divide up the ownership of that basket of stocks, and you'll be able to buy shares in it. So I also have mutual funds here, and I'm going to do these two together. Mutual funds and ETFs are basically the same, except mutual funds have real human beings that are constantly buying and selling things within that basket, right? So if, let's say, that basket of 100 healthcare stocks has one particular stock that does really well, they might sell that and use it to buy other stocks. So that's a human being doing it with mutual funds. ETFs, however, have a computer doing that. Why would you want a computer over a human? Well, first of all, there's much, much lower fees. There are fees associated with mutual funds, and that eats into your earnings and your profit. So I am not a huge fan of mutual funds ever since the advent of ETFs. So I'm going to actually put mutual funds in C category. You know what? Actually, I'm going to put it in B category. I know you guys are going to eat me alive if I put it in C category because it should at least be even with stocks, right? Because they are just a collection of stocks. ETFs, I'm putting in A tier though. ETFs are kind of my bread and butter. That's what I invest in for my retirement. That's one of the big things I invest in. It allows you to diversify. And while folks like Warren Buffett, who are super experts, believe that diversification is inherently stupid because if you believe in one particular stock, then you shouldn't diversify. You should buy what you think is going to go up in value. But for the rest of us normies, we diversify so that we can spread out our risk. We're willing to take lower returns in exchange for lower risk. And that's really what ETFs do. And I would say at least half of my net worth is in ETFs. So I'm a big fan, A tier for sure. Next up, car wash. Well, yes, I'm using this car wash image to represent small cash businesses. Car washes, laundromats, all that kind of stuff. You know, print shops, even fast food joints, right? Like franchises. I am a big fan of these kind of cash businesses. Now, while I don't personally own any, it is something that's on my short list of things to invest in, whether it's a car wash or whether it's a UPS store or a McDonald's or something like that, something where I don't necessarily have to be there full time, but has a management team in place and I can capitalize on, well, my capital and bring in a new cash flow. And for that, S tier. Now, I don't want to glamorize it and make it sound like you're going to be making billions of dollars from your one little local car wash. Automatic car washes usually net, according to my research, usually net about $30,000 a year, and the bigger, more serious car washes typically make like $70,000 to $100,000 a year. And $100,000 is on sort of the high end. So this is the kind of thing where it's like, if you've got some money and you can invest it and you can set it and forget it, you've got a good management team in place, then it's just another cash flow and, you know, relatively low risk. So I'm a huge fan of that. Buying small cash businesses is a huge opportunity. So S tier for me. Next up, Roth IRA. I made an entire video on Roth IRAs, and you can check it out in the card over here and in the description box below. And I think it is one of the most important videos that I have ever made, and you guys should definitely watch it. And you can probably understand based on what I just said that where you think this Roth IRA is going to go. But I'm going to slow roll it because before we move on, I do want to thank the sponsor of today's video, which is Whatnot. If you don't know what Whatnot is an incredible live video auction platform in which bidders and sellers come together in real time to buy and sell all sorts of really cool collectibles and all sorts of other cool stuff. And while I'm mostly into coins and precious metals, and as you saw here, Magic the Gathering cards, they've got everything. They've got trading cards, sports cards, comic books, video games. They've even got sneakers. Basically, if you collect it, they have it. And if you use my link, whatnot.com/invite/silverpicker to download the app, not only do you get access to the incredible platform for free, but you also get $15 in Whatnot credit to spend on anything you want. And at my auctions, I always make sure to have tons and tons of silver coins in the buy it now for $15 or less. So essentially, if you use my link, whatnot.com/invite/silverpicker to download the app, and you come to one of my auctions, you're all but guaranteed to just get straight up free silver. So anyway, definitely don't sleep on this because that deal won't last forever, I'm sure of it, and you don't want to miss it. Anyway, let's get back to the business at hand. We're talking Roth IRAs, and Roth IRAs get S tier. If you don't know what a Roth IRA is, essentially it is a government cheat code. It is an investment account for your retirement. It stands for individual retirement account, and it allows you to spend up to $6,500 per year. It changes every year, the limit that you're allowed to put in, but you can put that amount of money in every single year into investments. And here's the thing, It's money that you've earned after you've paid taxes, right? So if you get taxes taken out of your income, right, of your paycheck, this is the money that you get after your paycheck, you're buying into it. That's the difference between this and like a 401k. 401k gets taken out pre-tax. So you end up actually investing, but also taking home more of your paycheck than you would have if you do a Roth IRA. But the reason why a Roth IRA is so powerful is because you've already paid taxes on the money that you've invested, any amount of money that you make from that. So right, as your investments grow, when you turn 65 and you're eligible to take this money out and use it for whatever you want, you pay no taxes on your gains. Zero, zip, zilch, nada. It is free money, and go on the internet, look up a Roth IRA calculator, and you'll be shocked to find that it's basically a surefire way to become a millionaire. If you're under 18 right now or 18 years old and watching this, if you start from 18 years old, putting in the maximum all the way up until you're 67 and a half years old, that's like the longest you can keep it in there, right? You will have contributed about $250,000. But that money is worth over $3 million. It is such an incredible tool, and if you're not using it right now, you need to be. S tier, S tier, S tier, top of the S tier. Next up, we've got junk silver. You see all these silver coins? I'm talking about American or even world junk silver. This is where I say silver is silver, because you get the best of both worlds. You get low premiums, but you also get the fact that it is government issued. They're standardized coins, much harder to fake, and they are great investments. I am a huge fan, A tier for sure. I'm a huge fan of junk silver. Don't sleep on it. Next up, we've got art. Now, I don't think you're going to actually be buying the Mona Lisa, but investing in art is definitely a major, form of investment, and I've invested in art myself. Small scale, and honestly, it's similar to sort of my philosophy about coin collecting and magic cards. It's more that I want to enjoy it. I'm putting money into something that I could put into something that's junk and, once I'm done with it, it just goes in the garbage and is worthless. But here, even if I don't like it anymore, or my tastes change, or I need to sell it, I'll at least be able to recoup some of my money, if not all of it, or even make a profit. So the downside, of course, is that it takes a huge, huge amount of learning and education to know what to buy, when to buy. So you need to know about art, you need to know about the artists, you need to know about trends in the art world, you need to know about how to spot fakes and forgeries, you need to know how to understand condition, you need to understand a whole lot of stuff, and that takes a lot of time. And that's why I'm going to be putting it in C tier. It's not a bad investment if you know what you're doing, and in fact, if you really know what you're doing and you have hundreds of millions of dollars, it's probably S tier. It's one of the best investments you can make. But for the rest of us normies, well, it's going to be C tier. All right, next up, we got gold, baby. We got gold. This is gold bullion, whether it is government or non-government. We're going to assume that this is just good quality, real gold bullion. I am a huge fan, A tier. And even though I'm the silver picker and I got my start in silver, I mostly, personally, in terms of precious metals, I mostly invest in gold. Most of my precious metal stack, really 90% of it right now, is gold. And the reason for that is that it is higher value, it is much less volatile. Like, price changes are much, much smaller and slower with gold. It's a great hedge against inflation, and it physically takes up a lot less room. And although I'm a big fan of keeping my precious metals at my safety deposit box at my bank, if you have silver, you have to pay for a much bigger box, and it's also a pain in the neck to move it around. Let's say there is an SHTF situation or a zombie apocalypse and you need to boogie, right? You're not going to take 100 pounds of silver with you. It's going to be tough, but you could take the same value that's in like 100 pounds of silver with enough gold coins in the palm of your hand. That's why I'm a huge fan. A tier for sure. Real estate, commercial, residential, industrial, land, whatever it is. I personally don't own any real estate at this time. I did try to buy something, didn't work out well, but I didn't end up pulling the trigger on it. But I am learning, I am actively looking, and while right now is probably one of the worst times to buy real estate because of the high rates, etc., in general, there is a rule effectively. People who are wealthy buy real estate. And how do they do it? They put their money into it, and they create intergenerational wealth through owning land and through owning real estate. I can't sing its praises enough. I think real estate is probably one of the best investments you can make, though it does take a lot of capital and it is not always something that you can just do easily right off the bat. I haven't done it yet. I'm 35 years old, and I am hoping that I will have several properties under my belt by the time I'm 40. So it's never too late. I know it's cheesy, but if yesterday was the best time to do it, the second best time to do it is today. So real estate, we're talking S tier. That's right. Right up there with the Roth IRA, right up there with cash businesses, and right up there with investing in yourself. And actually, now that I'm looking at real estate, Roth IRA, and investing in your own education, I actually am going to knock this down to A tier. Even though I think they are an incredible investment and I am really gung-ho on investing in myself, looking at it here when I'm talking about investing in an advanced degree or a Roth IRA or real estate, which are three things that really have proven across decades and decades and decades, in some cases centuries, that those are things that are all but guaranteed to make you and your future generations wealthy. I don't know if that's the same can be said for a car wash, right? So I'm moving that down to A tier. S tier really needs to be those things that are basically guarantees to wealth. Next up is watches. Watches have always fascinated me, even though right now I'm not wearing any, but generally I just wear an Apple Watch, right? I don't have very many, I actually only have one semi-fancy watch. It's not even like a Rolex or anything like that. It's a Raymond Weil. It's, it's a nice watch, but it's not an investment grade watch. Investment grade watches are like Rolexes and Breitlings and Omegas and Tags and Patek Philippe's, etc. Those are things that actually can increase in value. And the Rolex market right now is super hot and people are making a ton of money on it. But unless you really know what you're doing, I would still say that investing is not the best way to go about watches. It's not the same as jewelry, even though you might think it seems that way, right? I said with jewelry, right, it's gold that you're investing in, you can wear it and enjoy it, and then when you want to sell it, you sell it. The difference is that watches have a way, way, way higher premium. They're marked up so much more than a generic gold bracelet. Like a Rolex, in terms of what you can get it used versus what it's new, really not comparable to like just a gold bracelet. If you can get a great deal on a Rolex and you're buying it secondhand and you're sure that it's real and you have all that information and knowledge, then you might have an opportunity, especially if you're really knowledgeable about the space. But for a newbie, I would not recommend investing in watches, and I would put it down there with collectibles in the D category, D tier. Next up is startups. Whether it's your own or someone else's, investing in startups is a very risky game, right? It's starting a business, hoping that it's going to grow, and spoiler alert, most startups fail and most investors in startups lose their money. If you look at venture capital funds, well, they're trying to invest in startups that they know that 90% of their portfolio will at best break even or likely lose money. And they're hoping for that, maybe 99%, really 1% of their portfolio they're expecting to be a moonshot, to 10x their money, right? And that's the same when you're starting your own startup or you're investing in a friend's startup. Those are kind of two different categories. I think that if you're investing in a friend's startup, it's more to buy capital in the friendship, I would say, more than actually in the business, because the likelihood of that business doing well is extremely low. You're most likely going to lose your money, and you should look at it more as just a way to support your friend, right? I'm talking low, friends and family around, right? You're putting $10,000 into your brother's business. I'm not talking about putting $1 million into, your buddy from the pool halls business, right? So when it's your own startup, though, that's the one where I think you should bet on it. And I actually have a startup that I founded that's in the mobility space, and we match people that want to be Uber drivers but don't have a car with car rental companies and match them up, provide them with insurance, et cetera, et cetera. And I've been doing that for the past 6 years. So I am a huge fan of startups, but even after 6 years, there's no guarantees that the startup will be successful and that I'll have a successful exit. So it's a huge risk, it's a huge investment in time, and I'm going to put it in A tier, even though I want to put it in S tier. I'm putting it in A tier because of the risk, right? Education, very low risk. Roth IRA, very low risk. Real estate, there is risk, but not if you look at it in a long enough time period, right? Especially if you're looking at it across multiple generations, the risk is very, very low, especially if you're talking about buying your own home. So those are S tier. Startup, I think it's A tier because especially if you're young, you've got time, take the risk on yourself, shoot for the moon. You could become a millionaire a centimillionaire or even a billionaire from a startup. You're not going to become a billionaire from anything else on this list. So that's why I got to put it in A tier. Next up, it says P2P. That is peer-to-peer lending. It's kind of like Uber in the sense where you've got people who use their personal cars, Peer 1, and use them as taxis essentially to pick up Peer 2. It's not a taxi company, right? It's peer-to-peer. So it's car sharing. There's a lot of peer-to-peer businesses. Peer-to-peer lending is essentially, there are all these platforms online where you can put money as a loan to all these different businesses. And some of them are ones where you can actually choose which business you're lending it to, some where you just sort of put it into a pot and then the management of the company lends it out and then you get a return. I'm not a fan. The reason is because generally the transparency is really low. You don't really know what's going on. There's not a lot of oversight. And also, the returns are not that high. So there are a lot of other things that you can invest your money in and get the same or better returns with much better transparency and much better upside. So I'm putting that in D. It's not an F because it's not like a scam. It's not really horrible and you can make money. I have friends that have made money doing it, but it's really not exciting, really not a major opportunity. And I think there are better places to put your money than peer-to-peer lending platforms. But speaking of scams, we have forex trading. Forex trading is trading of foreign currencies, right? So anytime you trade a foreign currency, let's say $1 for a euro or a yen for a renminbi or any other currency exchange, there's nothing wrong with that, right? That's a legitimate, the foreign exchange market is open 24/7 around the world, and it is a legitimate market. There is no question about that. The whole world wouldn't be able to run without it, right? You literally need to be able to transfer currencies because all these multinational companies, whether it's Google or Apple or wherever, who's selling their products and services all over the world, you need to be able to transfer currencies and exchange currencies. So foreign exchange is not inherently a scam. I want to make sure that that's clear. But around forex trading, there has been so many scams. And basically, I would say there are so many scams in that space that if you find an opportunity, the likelihood that it's a scam is much higher than the likelihood that it's legit. And again, this is an opportunity cost thing. It's not to say that nobody has made money in forex or you can't make money in forex. It's just that we have limited funds. All of us, me, you, most people watching, we have limited funds. If we have X number of dollars, we can put that in one thing, two things, or three things, but we can't put it in all 25 of these things in most cases, right? So we have to pick and choose, and for that reason, we have our first F, forex trading. Stay away from it. There are about as many companies, by the way, that are focused on getting money back for people who have been scammed by forex scams than there are examples of forex opportunities. So that should just give you an idea of how bad it really is. And we've got one more. We're on our 25th of 25 investment opportunities, and we end with another metal. This one is investing in copper bullion. I did a whole video on this. You can check it out in the card over here. I am not a fan. First off, these copper rounds are effectively made to trick you into thinking that you're investing in a precious metal in the way that you're supposed to invest in precious metals while you're really not. What do I mean by that? So especially a few years ago when silver was at $40 an ounce, we're talking like 2011, 2012, copper bullion makers came out with these 1 ounce copper rounds saying that copper is the next silver, get in while the getting's good, get in low. And they were selling these copper rounds for $2, $3 a round. People were like, oh, that's great. I'm buying silver rounds, for $30, $40 a round. Copper, copper's used in every house in the world. It's used in every wire in the world. It's going to go bananas. It's going to go huge. I'm going to make so much money. And that's before people realize that while silver is actually traded in troy ounces, copper is traded in pounds. So when people were looking at it, let's say in 2011, 2012, when copper was $4, it was $4 a pound, not $4 an ounce. So you were paying like 16 times the value. You're paying over by so much when you would buy one of those 1 ounce copper rounds for $2 or $3. And while yes, on the commodities exchange, if you want to invest in copper, go right ahead. I'm not saying that that's a bad investment at all. But if you're investing in physical copper, you are wasting your money and you are expecting something that just ain't gonna happen. You are not gonna double or triple or quadruple your money investing in copper rounds. And that's why I put it in F, because it really does trick people who otherwise would be getting into the precious metals or coins business or investment, and it turns them off from something that could be great. People who would otherwise be investing in gold and silver, which I think is a great place to park cash, they're getting turned off from the whole world of metals because they got scammed by these copper bullion scammers. We did it. We've got our tier list. We've got 3 S's and 2 F's and everything else somewhere in between. Now, I really hope you enjoyed this video. I really had a great time making it. If you want to see me do more tier lists, put it in the comments and let me know what you think. Also, let me know if you agree or disagree with my assessment here. What would you guys do differently? And I'm really, really curious because I want to learn more. And again, like I've been saying throughout the video, with our limited funds, we want to put our money to work in the best places possible. So I want to learn from you what you guys think is the best place to park your hard-earned cash, to invest it, to grow wealth, and hopefully grow generational wealth. So I make videos like this about precious metals investing, personal finance, coin collecting, and alternative investments every single week. So if you like that, you best hit that big old red subscribe button. Throw me a like while you're down there. It really helps me out. Hit that like button. Come on, I'm a YouTuber, I gotta ask. But I had a lot of fun making this video and I got a lot more great stuff coming down the pike, so stay tuned, and until then, Silver Picker out. A huge, huge thank you to all of my wonderful patrons. If you're not yet a patron, join the Patreon, the links are below, and you'll get access to my private Discord group in which all sorts of collectors come together to talk shop, talk coins, and just have a good time.